Welcome to another live stream with Intelligent Construction Opportunities. I'm Stephanie Brown, founder of Intelligent Construction Opportunities. We help technology vendors and founders and people like our guest today to increase their visibility both for their tools and programs and their construction experience. Today, we're going to welcome Chuck Harmon. Welcome, Chuck.
Thank you so much. I appreciate being here and thanks for asking me on.
Absolutely. So I want to share with the audience a little bit about who you are and how you got involved with Essentials Health Plan.
Okay. My first business that I started at age 23 was a steel fabricating company. I didn't know how to weld when I started the company, so that was a different experience, but I operated that business for 27 years. When I exited that, I decided I didn't want to be tied anymore to any type of building or certain location. I wanted to be free to travel or do other things I wanted to do. I did a number of businesses online, started in 2000, and I've been full-time doing that since I was looking for something that would really make a difference in people's lives. And when I ran across the EHP program, I was so impressed with it. I couldn't believe all the different ways that it can enhance and help people. So I feel like this is my life's work from here on out.
When you say EHP, you're referring to its Essentials Health Program or
Yes.
Health Plan, right? Do you want to talk a little bit about the disclaimer?
I just want to offer a disclaimer here. It's something that we are advised to do. The information provided regarding our employee benefits program, including potential tax savings and financial impacts, is for general information purposes only. While we strive to ensure the accuracy of this information, we're not tax professionals, certified public accountants, or licensed financial advisors. The tax implications of our program can vary based on individual circumstances, company structure, and the current tax laws. We strongly recommend that you consult with a qualified tax professional, CPA, or financial advisor to understand the specific tax implications for your business and employees before implementing our program. Tax laws and regulations are subject to change. We do not guarantee any specific tax outcomes or savings. Any financial or tax-related decision should be made in consultation with an appropriate licensed professional.
And if people want to be able to inquire a little further about this disclaimer, where would be the best place for them to reach you?
They could go to the website at h6.com, and I don't have that disclaimer up on the site now, but I will put it up. They could go /disclaimer.
So why don't we get into this and tell me what's it all about?
Okay, it's a program at no cost offers an employer the opportunity to use lowered tax liabilities to fund employee benefits. It adds $639 per employee per year to the bottom line of the company and also lowers workers' comp premiums by 18% without making any changes to their current workers' comp. So the program is the Self-Insured Medical Expense Reimbursement Program, SEMRT. It's a preventative care management program, and it is IRS, HIPAA, and ERISA compliant. It's available at no net cost to the employer or the employee.
So do you want to explain what you mean available at no net cost?
Sure. This comes under different regulatory agencies, mainly the IRS. It's a wellness program. And in order to qualify, an employer has to have a wellness program in place, which is part of what we offer. Also, it has to be a medical plan that's compliant with the Affordable Care Act, ACA. Remember these two items. This will make sense later when I'm explaining how this works. We have codes that allow us to make pre-tax deductions from the employee's paycheck before we figure how much taxes they owe. So it lowers their taxable income. Then under these regulations, we're allowed to add that amount back into their post-tax paycheck. So they end up with the same exact amount of money take home.
I think what might help here is to actually work through a scenario where we're working through a use case with some real numbers.
In order to qualify, the employer has to have W-2 employees, not 1099. They have to be W-2. Full-time, you look at the right slide there, or portion of the slide, should be 30 hours per week to qualify as full-time. And we need 25 employees as a minimum. We can go a little bit lower if they're in a higher income bracket, and they must have a health insurance plan in place. So that's generally thought as a group health insurance. However, we have a plan called the EHP MEC plan. That's a minimum essential coverage plan that if they don't have a group health insurance, this can qualify and still make them eligible for this program.
All right. So are we talking about the ideal profile for the EHP plan is a contractor, a general contractor in this case, or could it be a subcontractor
Yeah.
that has enough self-performing employees,
Yes.
and the self-performing employees have to be, you said there has to be a minimum of how many? 25. Okay. And then this program starts to make sense for somebody to take it on. So they either have a qualified health insurance program that they're already offering, or you will supply it if they're interested through EHP, correct?
And another thing I should mention here is that no matter what a company has in place, because many times they misunderstand what we're trying to do and they think we're trying to replace their group health or replace some of the different things they offer in the way of benefits. They don't replace anything. We just add this program right on top of everything they already have. So it's a total enhancement to whatever they have in place. No changes are necessary. You don't cancel insurance in order to put this in place. It goes right in place on top of whatever. So if you're offering benefits that are the same, this just enhances it. We're going to look at our sample paycheck, the best way to understand how this works. If you look up the upper right where it says paycheck frequency monthly,
Yep.
monthly wages, and this is an actual person, but an actual case, he's making $37.05 per month. That's his gross income. Go down to the dark blue stripe that goes all the way across. We can see that he has a current income tax liability and all the different taxes that apply. Then he has another one showing with the wellness plan what the difference is. He's
Yep.
making $37.05 per month. He has group health deduction. So his employer doesn't pay 100% of his health insurance. He's having to pay $465. We know that group health insurance is able to be deducted before they figure his tax liability. Now, when you deduct that plan, his income is taxed on $32.40, not $37.05. So with $32.40, his federal withholding is $388.80. His state withholding is $186.30. Social Security is $200.88. Medicare $46.98. So his total taxes are $822.96. That's what's deducted from his check. Okay. Over on the next column with wellness, this is after the employee puts our plan in place. He still makes $37.05. That's his gross income. He still gets the deduction of the $465 for his group health insurance. But now we're allowed to deduct, and this is strictly an accounting function. It never actually comes out of their check, but it's just allowed to use $1,220, which is the value that's placed on our wellness program. And that becomes deducted before his tax liability is figured. So now his taxable income is $2,020, down from $37.05. But you can see his federal withholding is $242.40 versus $388.80. And it just follows on down. All the taxes are lower because of the lowered taxable income.
The only thing I would say is we need to clarify what's the PCM after taxes?
This is the amount of the difference between these deductions and those deductions. So the difference between those is $309.88. This is an amount that he now can take and spend on health-related products.
That is the individual or the contractor?
The individual.
The individual can now spend $309.88. And is it in the essential health plan that he's looking to spend that money?
So let's back up a little bit. Remember, we took this out, $1,220 as a accounting function. When we get down to the bottom, we add that $1,220 back in. So
Okay.
you'll notice that you look at the first column and the second column, his take-home pay is exactly what it was before. But now he has $309 to spend on health benefits.
So if I'm playing the role of individual here, and this is my paycheck, I'm seeing that this plan basically takes a hold of my paycheck and all the payroll details around my paycheck, folds EHP into it to allow for that $309.88 to be absorbed. Is that fair?
Mhm. Now, you see the dark blue box next to all those deductions on the right
Yes.
says monthly FICA savings. So he's saving on FICA 93.33 per month. Now this becomes interesting to the employer because, and I know this from my 27 years steel fabricating, whatever the employee pays in FICA taxes, the employer matches. Since he's paying a lower amount for his FICA tax, the employer is going to pay a lower amount. So the employer is going to pay 93.33 less than he was paying previously.
For each employee that takes on this plan.
Exactly. Now, how EHP makes their money, they charge a service fee of $40 per month per employee, leaving the employer with $53.33 per month, which is about $600 annually. They'll go drop right to their bottom line every year, as long as they're on the program. Figure out 100 employees. I think that's 63,900, basically $64,000 drops right to their bottom line. It's just savings that they saved on FICA taxes. That's not counting the workers' comp premium savings that I talked about.